Welcome to Daily Finance News, where we keep you up to date with the latest financial happenings and provide insights to help you navigate the markets. In this multi-part video series, we will be discussing the United States approaching debt ceiling market meltdown and how investors can prepare for the potential fallout. With the U.S. debt limit fast approaching, the markets are in turmoil and investors are worried, as seasoned investors and bankers have been warning for months. If the U.S. government does not reach an agreement on raising the federal debt limit, the aftermath could lead to a global financial crisis. Let's dive deeper into the situation and what investors should do to protect themselves. Part 1: The United States Debt Ceiling Crisis. The U.S. government has hit its $31.4 trillion legal debt limit, and bipartisan leaders are taking measures to cut back spending just to keep the bills paid and the lights on. The political clout surrounding the solution to raise the debt ceiling has both Democrats and Republicans divided among themselves. Treasury Secretary Janet Yellen warned as early as January this year that if the U.S. government can't reach an agreement on raising the federal debt limit, the aftermath could send shockwaves across the world, leading to a greater global financial crisis. We've seen this before. The debt ceiling crisis of 2011 left markets crashing down and prompted the U.S. to lose its once perfect AAA credit rating from the S&P. Following the downgrade was a 15% decline in the S&P 500. And those sectors with close funding tied to the U.S. government fell by 25%. Now, history is once again repeating itself, with lawmakers in a deadlock over whether to loft the debt ceiling. If a deal could be struck in time, before June 1, 2023, the increase will be accompanied by spending cuts across government branches. But if an agreement cannot be reached, it could send further economic and financial turmoil across the global economy. Part 2: Navigating tumultuous conditions. The last several years on the stock market have been anything but ordinary, with investors and traders finding it harder than ever to remain buoyant amid volatile conditions. Many investors are left feeling defeated, with not enough arsenal remaining to fight off yet another crisis. Leaving conditions to unravel further would pose a huge risk to the American economy that would later play out on the global stage. As the International Monetary Fund warned earlier in April 2023, exposing the U.S. to additional risks could leave American economists and investors to deal with the repercussions. If the U.S. defaults on its debt, the negative impact could spread to a wide range of financial assets, including U.S. bonds, equities, and the dollar. This poses a broad range of new risks to investors who already have a hard time navigating conditions as is. Part 3: What investors should consider. Looking to park their cash in safer, less volatile assets has been hard to manage, considering the wider long-term effects of broader market declines against the backdrop of the debt ceiling crisis. The outcome of not taking action sooner can have detrimental effects on economic activity and portfolio performance in the near term. Here's what investors need to consider in the coming months. Minimize exposure to government-backed companies. Investors and traders need to start looking at their risk appetite and how much of their portfolio is currently dedicated to companies with a higher revenue exposure to the U.S. government. Companies such as healthcare, defense, and infrastructure run the biggest risk if the debt limit is not raised. Invest in high-quality international stocks. Another option would be to park cash in high-quality international companies that have a track record of riding out difficult economic conditions. A survey of more than 150 analysts, fund managers, and strategists covering 17 different global stock indices shows that 56% investors may also want to consider alternative investments, such as precious metals like gold and silver. These have historically been seen as a safe haven asset during times of economic uncertainty and market turmoil. Additionally, cryptocurrencies like Bitcoin and Ethereum have gained popularity in recent years as a way to diversify portfolios and potentially generate high returns, although they come with their own risks and volatility. Another consideration for investors is to review their risk management strategy. With market conditions in flux, it's important for investors to ensure that they have a plan in place for managing risk and minimizing losses. This may involve adjusting portfolio allocations, implementing stop-loss orders, or utilizing other risk management tools and strategies. In summary, the looming debt ceiling crisis in the United States is a cause for concern for investors and traders alike. The potential for a default on U.S. debt could have far-reaching effects on the global economy and financial markets, and investors should be prepared for potential volatility and uncertainty in the coming weeks. However, by carefully considering their investment options, minimizing exposure to government-backed companies, investing in high-quality international stocks, considering government bonds, and implementing effective risk management strategies, investors can potentially navigate these tumultuous conditions and protect their portfolios from losses. That's all for today's installment of Daily Finance News. Thanks for watching, and be sure to tune in again tomorrow for the latest developments in the world of finance.